Hi, everyone. Welcome back to the Leverage Loop podcast. Today's topic is around innovation and how to execute on innovation, both ideating and delivering on really big innovative ideas. This topic actually came about from an article we published 7 or 8 weeks ago, where we were talking about how mechanisms are that beat best intentions. And in that article, talked about some of my personal experience at Amazon, where pursued and actually acquired a few different companies, and also were running at some pretty big over the horizon ideas. And I had referenced in that discussion somebody who I'd worked with named Andrew Ruud, who I felt was unbelievable at this activity. Well, got a lot of great feedback and a lot of interest on the innovation side of that article. And so I figured what better thing to do than have Andrew actually come and talk about it. So I want to welcome Andrew to the Leverage Loop podcast. Andrew, thanks for being here.
Oh, thank you so much for having me, Bill. Super excited.
And, full transparency, I've known Andrew now for 7+ years. We worked together at Amazon for 3. And in that time, as I alluded to, we actually covered a lot of ground on multiple M&A opportunities, but really thinking big about the translation, both machine translation space as well as translation tooling and technology space. And Andrew was doing a bunch of things around AI and ML at his time at Amazon. His most current role, he's doing some over the horizon stuff. I honestly don't know even much about it, so I won't speak much to it today, but have a lot of context Andrew's experience previously. So I'm looking forward to having a great discussion. Andrew, if you don't mind, my first question is, could you talk a little bit about your background? One of the things you and I really haven't talked about is your earlier parts of your career, and frankly, how do you got to where you were at Amazon when we met, but even now where you are today? You've taken a really interesting path. You've done some investment banking type work. You've done some corporate and strategic finance work. You've done a bunch of strategic innovation, product leadership, product building work. Have you always been fascinated with technology, and has that been in your blood from early on, or was it something like a superpower that you discovered later in your career?
No, it's a great question. And again, thank you for having me. Coming out of college, as you said, I went into finance and, started off in investment banking in New York. And actually the sector that I was covering at the time was called basic materials. So, steel, iron ore, packaging, chemicals, those are the types of industries that I started off in. So, pretty much as far away from technology as you can imagine. And then I was doing that for about 9-10 months, and then I went to a startup investment banking firm by a gentleman who left Morgan Stanley. And I think that's really where I understood that there's a completely different way of doing things that is completely antithetical to like the big corporate way of doing things. And so I did that for about a year and change. Then I went to an investment fund that did a lot of activist investing. And that's really where I learned to see kind of like these quote unquote hidden cycles and being able to bring different perspectives to different parts of the capital structure. That really opened up my mind to being able to see opportunities from different angles and really being able to, kind of embrace the unknown. Then, I was a victim of the financial downturn, was laid off from that investment job
And that was
in
that was that
2010.
2008, 2010?
Yeah, exactly. Yeah. And it ended up being a really, kind of blessing in disguise. I went back to Morgan Stanley, where I started off my career out of school, and I did equity research. Something that's, it's a good job, but it's one that's not that in my mind is definitely a step back. But that's where I really got exposed to technology. I was on the internet team, and we covered different companies, including Amazon. And I was just really, really captivated by all the different things that these technology and internet companies were doing. And obviously, I was in research, in my mind, very temporarily. And in equity research, I think sometimes you feel like you're on the sidelines, kind of cheerleading for these companies. And, obviously I'm the type of person who wants to be in the game. And so, at the time, there was a gentleman who was in charge of investor relations, built a rapport with him, and one thing led to another, and I was introduced to some of the folks on the corp dev team, which handles the M&A and investments at Amazon, and I made that transition in 2013.
One of the things, that and I'm really curious about is, I always knew you had a really strong finance investment background, really analytical skill set. But the thing that impressed me most about working with you is your ability to see opportunities that aren't obvious, right? Sometimes it's real easy to go pursue when people are talking about, chat GPT right now, right? AI is the big thing. Go pursue AI. Right. You had a knack, and I know you probably still have this knack of identifying opportunities that people weren't talking about, or opportunities in technology where you're sort of gluing two or three disparate ideas together and come up with something really innovative. We did some work in the voice translation space that honestly wasn't even on my radar until you started talking to me about it and wanting to pursue it. But that was something that nobody was talking about really, even at Amazon at that point. And I'd love to know, like, if I hear that origin story, if you will, that you shared, it talks a lot about the data side of your sort of skill set. But I'm really curious about that. How do you make those connections? And is that approach you take with innovation? Is it a first principles approach, or is it more of an art science thing? I'd love to hear more about it.
Yeah, I mean, I first of all, don't claim to, have any superpower in that arena, but the way I kind of think about identifying opportunities really comes through this framework of intersections. So, I think a lot of things in the world are expressed in terms of like a vector. So, like, you can think about, you know, typically how does a business operate, and you'll see that, business is always in a pursuit of, wanting to, work backward from customers, identify opportunities to, generate revenue, get their cost structures in line, et cetera. So from a business standpoint, that vector is pretty consistent. Then on top of that, let's say that you have, a new technology or a science that's evolving, and that enables, a way to automate a certain function that, previously was, very hands-on, very human in the loop, very burdensome, in terms of being able to scale that. So when you have those two vectors on their own trajectories, at some point there may be an intersection. And once you identify, different vectors and the intersection points, what I've found is there's opportunity there. And so, you alluded to translation, and the ability to kind of think, differently about how we source data for automating translation. And, to me, that was a big opportunity where at the time, there was a lot of, innovation around natural language processing. It allowed us to really see opportunities where you could take training data from, sources where you could, very easily extract free text speech. And, that's a source of data. And as long as you have, the corresponding language pair on the other side, you could use that training data to train, translation models. And so when you identify, an intersection, typically that's where you'll find opportunities. And, you may see that there are more than two vectors that intersect. And the more vectors that you have at the intersection point, the more interesting the opportunity sets are. It can get complex, but by and large, that's kind of where I look, is you kind of follow these different trends. And it may actually be that as you think about, and observe the world, it's kind of like picking up pieces to a jigsaw puzzle. And you may have, 9 out of the 10 pieces. And then all of a sudden, you have a conversation like we're having right now. And, you have this eureka moment where all of a sudden that 10th puzzle piece just kind of forms in and of itself. And, that's kind of where you can kind of put everything together. just through different contexts and chatting with different people. And by and large, that's kind of where I source the ideas that we work on the team that I'm on now.
Very cool. And one of the things I'd love to even go deeper on still is, there's this concept, especially in startups, of going 0 to 1, right? Taking an idea and going and finding product market fit with it, finding, does the idea actually does it carry water? Does it make sense? There's also, going from 1 to 100. And sometimes that 1 to 100 is just as hard, if not harder, than the 0 to 1. And, in some of these ideas you talked about in terms of finding the right intersections, right? That gets you 0 to 1. But I've even seen where, when we're talking about we use a translation example of a new idea for Amazon in terms of voice translation going 0 to 1, and how to accelerate 0 to 1, but then how to then take that from 1 plus. And I guess two parts. One, I'm curious about is how do you get the data, right? As you're, even in your role where you were sort of across a lot of different innovation areas at Amazon, some of these things like voice translation, it wasn't something that was, like I said, on anyone's radar, while the data sets might have been something that you'd heard or talked about. I suspect there's other avenues of information that you're using to help start creating these intersection points. Like, where do you find information, or how do you go about ingesting information to help you have more opportunities for intersection points? And then maybe a second part of that question is, once you've identified an intersection point, how do you then take it from, at least maybe in your current world, where whatever that is, how do you take it from 0 to 1, then go from 1 to 100, right? And know, like, where's the next pivot area or next area of innovation inside of a broader product idea that's still in line with the first one.
Yeah, and that's a pretty big two-part question. The way that I might address that is, the first part. I think that when you think about the 0 to 1 innovation, it's that in my mind, that's the hardest part. It's rife with ambiguity. I think larger companies such as Amazon, as one example, struggles with ambiguity at scale. I think that there are a lot of folks at the company that on an individual basis can handle ambiguity, and can really distill kind of an opportunity to improve the customer experience. But being able to replicate that across the entire company, that's not something I don't think that these larger companies have figured out. And so, to your point, the team I have now really focuses on leaning into that problem set. And I think you're obviously very familiar with Amazon's leadership principles. One of those is think big. And I think that over time, I've seen that think big is usually met with a desire to start big. I think, PR FAQs are kind of a very known mechanism for expressing an idea, fleshing it out, and using that as a parlay into a resource ask. A lot of the ideas that are floated by, kind of senior leadership at Amazon, and I'm sure other companies, there's a big emphasis on, okay, well, will this move the needle for a company of our size? And the answer to that is, well, I think a lot of executives default to, yeah, it certainly could, and therefore we need to staff it with a very large team to get going, because if it's a big opportunity, you really want to invest behind it, especially a company the size of Amazon or some of these other larger tech companies. The reality is, though, that innovation is hard, and it's something where you've got to make a lot of very discrete decisions. Decision-making velocity needs to be high and high quality. Like, move fast with a lot of judgment. That's hard to do when you're kind of making decisions by committee, with a large team. So what we embrace on the team that I'm on now is, think big but start small. And that ethos has served us really well, being able to identify a real, opportunity, and then uh, thinking through, okay, well, how do we get started, and what is sort of that, kind of validation that we're seeking. And so the signal that you receive as you're working through, validating an opportunity, that is, that's like for us, that's the holy grail, right? That validation of you've got the right problem, you're on the right track for a solution. When you can move fast and attain that validation at a relatively low price, meaning you're talking about 2 to 4 people's time over the course of, call it, 6 to 12 months. um, you, that enables you, as to double down very quickly and repeatedly, and from there you can actually, with a high degree of confidence, grow a team to invest more and more and more into an opportunity. So the way I think about this is, there's a validation phase where you kind of prove out the thesis that you've got something that can actually solve a customer problem. And for us, that's the 0 to 1. And then I think when you think about those 1 to 100, I don't know that our team actually thinks about taking something all the way to 100. That's kind of an amorphous idea, but the way that we kind of tackle that next phase is really about what's going to be required in order to actually scale this early signal and these findings to a point where we can actually integrate this new opportunity into Amazon and use it to start a new business. So the way that we kind of think about this, very analogous to the times that you and I have been referring to, is how do we build a startup that would be a good candidate for Amazon to acquire? And that's kind of the bar that we kind of use in terms of, 100, as you referred to, is, hey, this is something that's been evolved and developed to a point where, yeah, you've got technology that you've built that's differentiated. You've got a team that you've hired and put around this idea. And, if we were outside of Amazon, it's very likely that we'd get a call from the corp dev team and they'd be interested in acquiring us and integrating us into an existing business at Amazon.
That's really interesting, and it actually generated, or sparked another question that I have. One of the things I think a lot of companies, and I feel like Amazon does really well, and I think you and I even did, frankly, even better when we were working together, is vetting big ideas and running at them. But I think a lot of companies, right, especially startups, they go from 0 to 1, maybe go 1 to 10, right, where they get product market fit, they find early success. They may get, whether it's fundraising before this last year or just through revenue growth, get a little war chest built up of capital, and then want to deploy that capital really fast and do it potentially in a haphazard way and making some bad bets that never have a chance of fully paying off. I'd love to know your approach to this, because you and I actually, one of the proposals we brought to Amazon senior leadership was a pretty big one, and it was really focused around how to use humans more intelligently in the translation process, not unlike MTurk, but in a much different way than MTurk operated. And that technology, one of the things we had identified was there were a few potential acquisition targets we wanted to go and pursue. And so we made a pitch to Amazon senior leadership, and at the time that was Jeff Wilke was the CEO of Amazon Consumer, and I think Jeff's exact quote was, "Wow, this was pretty ballsy, guys," which I took as a compliment that we were really thinking big and not afraid to push the envelope. But and we eventually landed on, I think, a smaller target and a smaller risk take shot that we wound up taking. But you've done a lot of these big proposals, big asks, and a lot of them have been really successful at Amazon, right? When I say successful, not just, hey, the value thesis was basically proven out and we got back to break even, but 10x return on invested capital with that investment or that big bet. How do you, when you're making a pitch like that for a sizable investment, how do you go about winning somebody over? I think, again, there's going to be CEOs, startup CEOs that listen to this, even CTOs that listen to this, and whether it's pitching boards, pitching VC companies, or if you're at a larger corporation, pitching executive leadership on a big idea. How do you go about pitching those really innovative big ideas, especially when you have the signal, you know that this is a winner and you're looking to accelerate through build or buy? Um, when potentially leadership may be hesitant to make a really, really big bet, or there's uncertainty around it.
Yeah, I would say that when you're trying to make a pitch for thinking big and acting big behind it, it always helps to be very crisp around um, framing it through both a near-term perspective as well as a long-term perspective. And I think that there's a lot of leaders at different companies that will pursue, for example, an investment or an acquisition because they think that there's going to be an immediate payoff, because they think that it's a solution to a very pressing need. Taking acquisitions as one example, an entire acquisition process from the start of, hey, we think that there's some really interesting innovation going on outside of our company, and therefore we want to start looking at who's doing what and trying to get a better understanding of whether or not what's being developed out there, outside the company is legitimate and could accelerate our roadmap to the point of closing an acquisition and having it integrated. That's an 18-month process. And so to think that there is a magic wand that you can wave that an acquisition will solve a right now need, I think is misguided a bit. So at least Amazon, I can say with confidence, doesn't use acquisitions as a tool to solve right now needs. And so because of that, because of the discipline that, and again, I can only speak for Amazon, the discipline that Amazon brings to its acquisition process, it's kind of a forcing function for business leaders to think more strategically about, taking these bigger risks. And so therefore, when you have a strategic opportunity, it's kind of a double-sided, it's a double-sided sword, it's a double-edged sword, because it may be harder to discreetly outline, here's the financial return that you're going to enjoy immediately. And so a lot of the analyses, at least that you kind of use to buttress a case for making a large investment, really comes down to, how can this be truly game changing? How can this really kind of seed the next, another leg of the stool, strategically for a company such as Amazon? And so if you're a CTO or a CEO of a startup and you're kind of thinking about making a big move, making a big investment, and let's say that you need to go raise more funding from your investors, the way that I would pitch it really comes down to thinking, like, how does this change the calculus, long-term calculus to the company? And I think for that reason, acquisitions are really hard for startups, because startups by their very nature are extremely focused and very obsessed, almost monomaniacal about solving a certain problem for a customer. To say that we need to go and make an investment or an acquisition to accelerate that as a startup almost means that, well, hey, this is a big pivot point for us. And so that's why, I typically don't see a lot of startups doing acquisitions or making big investments of that sort. Now, you can have, kind of, further down the alphabet levels of funding, those startups, that are tapping growth capital, they certainly are in a position to make acquisitions. So I think that companies that are in a position that they are able to raise growth capital and they have a very clear understanding of what they do and they do it very well, they might find an opportunity to buttress their existing set of capabilities by making an investment or an acquisition. and it could be highly complementary. And going back to these intersections that I referred to earlier, you can have a company that's fairly well established, identify an intersection where they take their core unique ability and then they find this highly complementary capability that they want to add. And at that intersection point, all of a sudden they open up a new complete set of opportunities to work on behalf of their customers. And so I think that acquisitions and investments are more so, they should be thought of as a strategic tool to make big game changing opportunities come to life. But I think in terms of smaller companies thinking about that, I think that it's probably kind of an option of last resort.
Yeah, I look at the example, like you talked about Amazon, and Amazon's been really disciplined about acquisitions. And while not every single acquisition Amazon has made has turned out to be, wildly successful, the majority of them usually always integrate well and wind up being relatively successful. But then you look in the broader market, and I'm going to avoid saying many names, but there's a lot of down the alphabet companies that go around acquiring or investing in other companies. Look at AT&T and some of the investments they've made historically that they've just wrote off and spun out, or even some of the the big media conglomerates. Like, it's almost a joke how much they acquire these companies or make these really big bets that they then immediately write off in 3 or 4 years. And I'm just curious, like when you approach that, you've been even inside of the Amazon ecosystem. You've been super successful about both identifying great opportunities that, in working with partners that have been able internally at Amazon, deliver on those, whether it's bets or acquisitions, integrate them and deliver on the upside, the upper end of the success criteria. And I'm just curious, like, there's has to be a difference in approach that some of these companies are taking. I think some of it's just being undisciplined, right? Like, hey, I got money to burn, let me go throw it at this idea. Or I think you alluded to trying to immediately solve a problem. I'll call that solving yesterday's problem, right? I had a problem yesterday that I'm trying to buy my way out of today, or an opportunity I should have been running at a year ago that I'm now going to try to accelerate and go chase. Those never usually pan out. But there's a lot of bets people make that aren't that still wind up never panning out and wind up being just written off. How do you avoid that? And if you're pitching, when you're pitching, how do you make sure that that pitch is landing correctly on, whether it's Amazon executive leadership or even outside of Amazon when you've pitched in other settings? How do you make sure that the case you're making is both well thought out, but more importantly, that the right data points are landing too?
Yeah. So as you referenced, acquisitions are a tool that different companies kind of think about differently. You reference media companies. Media companies are always looking for kind of content or content assets. And so, if you're a large media conglomerate, I think, the ability to kind of originate your own content. I mean, they've got teams that do that. And a lot of the big conglomerates do that very successfully. But there's also, as you said, a very vibrant community of startups and kind of smaller companies doing very interesting things in terms of creating content. Whether that, in today's terms is TikTok, building up a very large user base that is kind of crowdsourcing and creating content that is attracting eyeballs and therefore creating, ad revenue opportunities. Um, those types of assets attract larger conglomerates because they think about diversification of their portfolio of content assets. And I think it's one of those things where if there's lightning in a bottle somewhere, they're going to be very interested in acquiring it. I think some of the issues they face, though, is that at least in the content space, is that trends change, and so you do see that they buy what's hot, and today that may not necessarily be generating the same traction and level of following in a couple of years. So I think that it's not necessarily a defect of an acquisition strategy. I think if you have a hot opportunity and you can monetize it, you've got that machine that's built to monetize it. It could be a successful acquisition as they define it. I don't know because I don't work at those companies, but I think it's harder to sit back and really kind of look at those and say that their acquisition strategy is necessarily misguided. I think it's just very different. I think that at Amazon and some of the other larger tech companies that I know of, their acquisition strategy is really around how do we accelerate strategic roadmaps? How do we think about what we're going to need tomorrow and position ourselves as successfully as possible to put ourselves in this position to succeed today. So a lot of times you're finding opportunities to make bets that will pay off over time. One of the things I think is a key success criteria for making those types of investments really comes down to what is your plan of record? What's your roadmap today? And as you think about how that will evolve over time, what are some of the what are some opportunities to kind of buttress that? How to make an investment that you may not necessarily see merging, tomorrow, but if you think a few years ahead, that's definitely going to be, a key component to successful customer experiences. And so you can make an acquisition with the conviction that's needed to make that type of one-way door decision because you have a vision for where this is going to evolve longer term, like your roadmap. And so when you're in the position to be able to make those types of decisions with a longer clock, I think as long as you do your proper diligence, you vet the technology, and more importantly, you're vetting the team that is going to be coming along that will continue to build that technology, you're going to be in a great position where as you think about the risk reward, the scales are going to be tipped in your favor for sure.
One of the things that I think I'll slightly disagree with you on is I do think other companies use really, I don't know what rubric or what methodology they use. It's just bad. And I will tell you this, like, it's not where we've been talking about acquisitions as sort of a straw man in this specific topic. But I've seen the exact same thing happen with just big investments or new investment areas where not even an acquisition where somebody, I've seen the logic, and I won't say names, but firsthand seen the example of, and I'll make it completely off the reservation, but it'll be apples to apples of the example will be McDonald's is a $100 billion company, or tens of billions of dollars a company for sure, because they sell hamburgers. Let's go make our own Burger King and turn Burger King into McDonald's, or let's go build our own McDonald's because they can make, billions of dollars selling hamburgers. We could make billions of dollars selling hamburgers with no rationale or no thought put into how did McDonald's get to where they are today? What type of market penetration and loyalty do they already have? Why do you think anyone else could create a burger chain, that's going to replicate that? And why do you think like doing it on a shoestring is going to magically turn into something? Like I've seen that exact argument made in a different context than burgers, but to use making an investment that was doomed from the start and then proved to be doomed from the start when a year later it was scrapped completely and abandoned. And that's the type of thing that I when I think about the things you've done, even Amazon, again, in a different framework, and I'd say a much more sensible and one that's set up well for success, you've been able to still overachieve in that framework. And one of the things that it's really, I think, interesting to me is like the approach you've taken is asking yourself, what I've seen firsthand is asking about the consumer and like, will this benefit the consumer and how so? But then asking like, what are the multiple ways this is potentially going to win? And so like, I know at least the last case you and I worked on together where it was a smaller acquisition, a great little core team. They had built a really interesting app. That whole thesis, though, it had 3 or 4 ways of winning, and we just happened to hit on all of them and overachieve. But like part of that discipline was not just the big idea, but it was the big idea coupled to like how to deliver in reality. And I don't know, maybe you haven't even thought about it, but like I'm curious, like, do you have your own approach to that to really make sure that when you're, not everything is going to pan out. You're going to take risks, and some of them are going to fail. But the bets you are proposing to make, like framing them in such a way that it's, hey, look, like ultimately this could fail, but here's why we think this is the asymmetric upside is there, or the risk reward is there to make this bet.
Yeah, I think that, okay, so first of all, you are correct. I think that there are many companies out there with very defunct acquisition strategies. They use that to plug holes. And I said before, acquisitions are hard. And, that at the very least, I think it's about an 18-month process. And so if you're trying to solve a problem that needs resolution on a timeline that's shorter than 18 months, you're really upping the risk in a very asymmetric way by pursuing an acquisition to solve a problem. So, as you said, if you're trying to solve yesterday's problem with an acquisition, I think you will probably find more often than not that the acquisition is just not going to really pan out, because there's a lot that goes into, bringing in a completely different company, different technology, a team that has its own culture, and kind of integrating that into the existing business, regardless of the size of the company. That it's a high risk bet, and I think that acquisitions are hard. I mean, the is that a lot of acquisitions fail. So you're absolutely right in that sense. I think that as you look at how do you make good strategic decisions by kind of tipping the scales in your favor, again, you're right. Let's find opportunities that are longer duration, meaning we have more time for it to pan out because we're trying to solve tomorrow's problem, not yesterday's. And that you set it up for success by identifying multiple ways for it to add value, to the existing franchise. And that, I think, is, if you can do the work and you can find a way to identify different streams of value, that really tips the scales in your favor. And I think there's not really, in my mind, a playbook that I can say, hey, here's the checklist that you need to abide by when you're trying to evaluate these opportunities. I think it's partly it's opportunistic. The opportunity that you referenced, the latest one that you and I had worked on, as you may recall, that was completely serendipitous. There was a firm that was shopping, the asset, and it seemed like there were multiple tie-ins with your existing roadmap at the time, and that enabled us to be able to develop the core thesis. So, what's the biggest reason why we want to swing the bat at this opportunity? And then, as we did a little bit more digging, as you recall, we identified other ways that this asset could potentially provide value to different parts of Amazon. And I think that's really where you can develop these secondary use cases that can really, provide a lot more justification for, taking on something as risky as acquiring a company. And I think you and I were very fortunate that as we, went through the entire process, again, it was a longer process. This wasn't something that we got done in a few months. The thesis played out. Like we proved that out together through hard work and creating the right relationships with different parts of the organization that were able to make great use of the data that we were able to extract with this asset that we acquired. So I think that finding multiple value streams is always something that is great. I think at times it can be harder for certain companies because they're maybe not as diversified as an Amazon or some of the larger technology companies. But regardless, I think that even if you're kind of a very singularly focused company, it's really easy to find different ways of extracting value out of something. whether that be a build decision or a buy decision. And I think that, for example, thinking through, as again, a business is there to make money. So how does this investment or this acquisition, how is it going to make money? I think in this day and age, the next question is, what sort of data can I extract from this investment or this acquisition, whether it be building or buying, and data is everything right now, right? So that's an easy low hanging fruit opportunity. Is if you're going to build something or you're going to buy something, and there's this kind of ongoing perpetual stream of data that's produced, that's an easy opportunity to capitalize on. So there's, I think, now more than ever, it's easier, in fact, to be able to identify and harvest more fruit out of investments that you make.
Yeah, and when you say data, I'm going to assume, and I just want to clarify for any listeners here, that the data you're referencing isn't just I think when people hear data and harvesting data, they think of the worst use case, which is taking data, pulling it, personal data out, and then selling it to a broker or a third party. It's also taking signal from potential product or a new offering and using that signal even internally to either to speak to new customer bases, to be able to target new product opportunities, et cetera. So that data is well beyond just the sort of the bad use. I would consider the bad use case of data of mining data for that the consumer isn't aware of for nefarious purposes.
Oh, absolutely. Sorry, being sitting at Amazon, being very customer obsessed, I don't even think about use cases of using data in nefarious purposes. To your point, what I was saying is, being able to harvest data that informs other decisions that you're going to make as an organization to build better customer experiences internally. 100%.
Yeah, and I think a lot of people miss that. Like, and I obviously knew what you meant, but a lot of companies, startups, and even bigger companies miss that opportunity of, hey, this data isn't just going to help us get more data on a consumer that we can go parcel off to subsidiaries or go sell to third parties. It's really about learning about the consumer and learning about the market and identifying new opportunities in the market that you can then go build or innovate on behalf of consumers in. One of the things you mentioned too that I wanted to circle back on is I think the word that comes to my mind is discipline, right? Having discipline up front, thinking about whether it's build or buy for a big bet or a big opportunity. How am I going to quickly learn and know if I'm on the right track or not? If I'm building, if I'm going to try to acquire something because I'm beyond the learning stage, how do I multiple value streams? How do I make sure, like, what happens if my core thesis isn't right? Is there still a way to make this successful or to gather or glean success from this so that the investment isn't all for naught? But then discipline on the backside, like a different example that you and I worked on together was the first acquisition that I was a part of. It was a machine translation startup that was local to Pittsburgh, and part of that thesis was around what skills they could bring into the company, the existing technology could bring to the company, et cetera. But we had discipline in the execution of, in that case, again, an acquisition of when things didn't go well, right? We discovered some stuff after that we acquired them and had integrated them that we had to quickly pivot on. Certain licenses we had to adjust to, or certain technology that we weren't really comfortable using. And pivoting out of those without losing focus on the core thesis and what we were doing, I think is super important. Like if I contrast that to, and I've never been a part of AT&T, but I'm going to use them as an example. They acquired DirecTV, 5, 6, 7 years ago now. They acquired DirecTV. They screwed with the brand. They tried to build a streaming platform. They screwed with that brand. No discipline in the approach from outside perspective of the consumer. And I was a consumer of both of the satellite product and of the streaming product. They then do that for a while. They spin the thing out and basically divest themselves of it and have to rebrand it as its own entity again. Meanwhile, the streaming product never made any sense. I don't even know what I think it's still called. I think it's DirecTV Stream now. I don't even know for sure. The satellite product DirecTV right? Like there was no discipline from the consumer perspective, no discipline on what the approach they took, how they took it, what they did, what they were doing with it, why they acquired it in the first place. And I've seen that play out on smaller scales at even some of the startups that I've been a part of. And I think that discipline is super important because ultimately, right, again, if it's a build or buy decision, I've seen this equally on build where people aren't disciplined up front, justifying the rationale, really pressure testing the assumptions and trying not to get sort of sucked into either shiny objects or convincing themselves of grandeur use cases. But then on the execution, being disciplined on when you're trying to prove a concept, being not identifying when's the kill moment, when's the point to walk away, and then also identifying, hey, where are the other pivot areas I'm going to go learn and explore on, and make sure I stick to those and execute, and understanding what are the when issues, situations or unexpected things pop up. How do I make sure that if they're not part of the core thesis, that solve them, resolve them without getting distracted from the core thesis, and vice versa. When they are, how do you know when it's time to cut bait versus it's something that just needs to be adjusted to?
Yeah, there's a lot there. I think when you're building, you got to find a problem that's worth solving, and that's really where a lot of initiatives fail from the get-go. Is you're solving the wrong problem, or you're building a solution in search of a problem to solve. I think that's one thing that Amazon has done very well is working backward from a customer problem that's very clearly articulated, and building a solution that meets and exceeds expectations to solving that problem. So from an organic build perspective, I think that's the single biggest pitfall that a lot of startups and internal teams of larger companies sort of tie their sneakers together and then start trying to run a marathon, is that they are doomed from the starting line because they are not solving the right problem. They're not working backward from what a customer is actually telling them. And in the case of trying to solve an unidentified need, because sometimes customers don't know that they need something, starting with too large of a scope. So you've heard of scope creep, but you can start off with having scope that's too broad, and because you're trying to solve too much from the get-go, it dooms you, and that lack of focus actually comes back to really bite you. I think that you alluded to other companies, and they kind of make these very large bets that don't pan out. Again, I don't have visibility into the strategic rationale of those companies and why they did what they did, but I think as you can look at the symptoms of what did they end up doing post investment, and my guess is that they probably did something very similar where they say, hey, we are a large diversified media company, and again, we want to acquire an asset that has unique and differentiated content, or maybe a distribution channel, or maybe these customers are highly complementary to the ones that we have already. But you've got to always ask the question, what's in it for my customer? Like, why is a customer going to be super delighted by the fact that I am acquiring another business? So those existing customers of the acquired business, why are they going to be jumping up and down at the prospect of me acquiring them? Meaning the business and the customers they have. If you don't have a great answer as to what's in it for those customers, then you probably have potentially misguided acquisition rationale, because those customers needs to be very obvious why this is going to be accretive to their experience, why it's going to be valuable to them. If you don't have that answer, then all you're doing is you're introducing a whole lot of risk. Again, we talked about how risky acquisitions are. And the folks that actually end up paying the price for kind of cavalier decision making around that type of risk are the customers. And so that's why I think in the case you cited, there was a decision, well, gosh, we should probably unwind this and try to return this asset to its previous state as closely as possible and call it a day, because there was certainly franchise value in the asset they acquired, and they ended up doing more harm than good, which destroyed value. And therefore, it's not surprising to see that they kind of reverse course and tried to kind of put things back the way they were. So if you don't have a great thesis on how you're going to improve the customer experience, then you probably don't have much business making a big bet like that in the first place. But that's just me assessing this from the outside.
One of the things you said was actually going to be my last question, and I want to circle back to it just to make sure we put a bow on it. I think one of the things you and I, we share a bunch of things in common. We both love building, both technology, but more importantly, outside technology, both in
Yeah.
carpentry, woodworking. We've also both made small angel investments in companies and had played in that space as well. And you had talked about, my question was going to be around like, hey, what do you see when you're working with young startup leaders or even in the startup space? Like, what do you see as the most common mistakes they make? And I think you alluded to some of it already directly. We talked about some of it about tying shoes together and trying to run the marathon, and not really having a crisp thesis to start with, and that dooming everything else to come subsequent. Is that the one you see the most when you're looking at it from the outside?
Yeah, well, I think, startups, like if you're going to be making an investment in a startup, it really comes down to people first and foremost. And I think that um, there are certainly there's a rare breed of person out there who is very, again, use the term monomaniacal about a customer problem that they want to solve. And when you meet those types of people, that is really kind of the ace in the hole, um, because those are the folks who are going to be making the hard decisions, the two-way door decisions, and more importantly, the one-way door decisions. And so I think it really comes down to the people that are working at a given startup. And so for me, it's really about um, assessing the quality of the leadership team, and what it is that they want to build, why they want to build it. That's most important when you think about making an investment, whether it be an acquisition or if you're going to make a direct investment. It really comes down to the people, and that may sound cliche, but you wouldn't believe how many times investors get super obsessed about what it is that is being built as opposed to who it is that's building it. And I will always go back to who it is that's building the cool stuff as opposed to how cool the stuff is in and of itself. Because when things are going right, it's really easy. Like we've seen cycles where you can't throw money at opportunities fast enough, and it's high fives all around. When things go bad, or when you have leadership teams at startups facing adversity, that's when you really see who makes the cut. And so you want to make sure that your bets are placed behind folks who have that ability to exercise consistently great judgment, and who are not afraid to adapt, not afraid to pivot, not afraid to figure out and hustle their way out of precarious situations. So in my mind, it really comes down to who's the founder and do they have what it takes to be able to lead through different types of problems that they're going to inevitably face as they develop and build the company.
So would it be fair to say that it's really two who's and uh, who the founder is, the discipline they bring to the problem space they're running at, and then who the customer is and the discipline being brought to identifying and serving that customer?
Yeah, I think you could certainly say it's two who's. I would say that like who the customer is, um, I would say it's more of like what is the problem that that customer has that is worth solving, and how does your solution actually address that problem? And is that solution something that's scalable? Is that something that is a durable idea? Or is it something that's going to constantly need to be monitored and you know, you're going to need to make constant pivots and adjustments to the solution. It's fine to have, you know, a solution to a customer problem that constantly needs monitoring and improvement. That doesn't mean it's a bad idea or a bad pursuit. If it's solving a customer problem, it's, you know, there's a big opportunity to make money and to you know, have that be an extremely durable idea. But it's just different. So I would say that um, you know, it's I don't necessarily think that it's necessarily who the customer is. I think it's really a matter of like who that entrepreneur is, who can that entrepreneur attract to work at that company and to continue developing that customer solution that's most important. But I mean, it's just my 2 cents.
Yeah, I was referring more to knowing who their customer is, meaning
Oh
not
yes,
not like the person of the customer, but like what problem am I solving and who am I solving it for? Like,
got it.
yeah,
Yeah. Oh, yeah. Voice of customer is extremely important. Knowing who your customer is, being able to walk a mile in their shoes, that's extremely important. So in that sense, I totally agree. Like you've got to know who your customer is, and you've got to be that type of leader who's going to, you know, single-handedly obsess about solving that problem day in, day out. There are multiple examples of startups that, you know, compete with large technology companies with, you know, obviously orders of magnitude different resources and personnel, and they're able to outmaneuver and you know, kind of defend their turf, so to speak. And the reason why is because they're singularly obsessed about solving the problem. They care a lot about you know, the decisions they make that impact that experience for the customer. And so, in many ways, they beat these larger technology companies at their own game because of this singular focus. And I think that you know, that's part of the reason why, you know, the team I have exists is because, you know, larger technology companies do great things, but at the same time, I think scaling the ability to make, you know, small targeted investments that are singularly focused on customer needs becomes a little bit harder because there's this fallacy that you need to invest a lot behind a fresh new idea for it to have the potential to really move the needle because you're so big.
awesome. Well, Andrew, I think we've had a great conversation. We've covered a lot of ground. One of my traditions, and when I do these podcasts, I always like to ask if you have any questions you'd like to ask me. Do you have anything you want to cover today?
Yeah, you know, I think it's really interesting, you know, your journey. So, you know, you've obviously worked at a larger technology company. You've, you know, had multiple roles, you know, in leadership at startups. And you know, for my own benefit, I'd love to understand um, as you as you kind of are in a position where you're needing to build and build fast, um, how do you think about the trade-off between, you know, building to get the signal to validate a thesis versus building for scale? Can you do both of those at the same time? Or do you really have to be discreet about, hey, here's an opportunity. We don't know yet whether or not it's going to pan out. Therefore, we don't want to build for scale because that requires a whole different mindset and level of resourcing. But if it pans out and we're right, we obviously are going to want to build it the right way so that it can scale and be durable. So how do you think about that trade-off, and how do you resource opportunities like that appropriately?
It's a great question. When I think about on both on a product and an engineering perspective, when I'm looking at new opportunities and trying to find, we'll call it product market fit with those opportunities, or at least find signal from them, I take sort of let me take a step back. My general sort of tenets, and I've talked about this in a previous article, are in order: keep it simple, stupid. You aren't going to need it, so don't build unnecessarily, and also try not. Lastly, don't repeat yourself. Um, and so would keep it simple, stupid, and the you ain't going to need it, don't build it. I think it really speaks to intentionality, right? When I'm pursuing a new idea, part of both the product side and the engineering side, especially when I'm leading both, is you're not going to do anything to the exclusion of scale, right? I'm not going to build to the exclusion of building something rigid or building it so it's not extensible or whatever. But you need to be intentional about when the cost of building something to scale or building something to be extensible is uh, is materially more costly than getting the signal, making a very intentional decision on that, and I will bias toward the signal. Um, Now, when the cost is negligible, bias toward building it right the first time. And so part of that though is being intentional about the approach you're taking to building, even when you're trying to find proof of life or find product market fit. Knowing what decisions you're making and targeting it. Like a great example of this would be building, in the insurance space. There's lots of lines of insurance, both commercial insurance and consumer insurance. Whether it's on the consumer side, auto, life, renters, homeowners, on and on, pets insurance. On the business side, you have workers' compensation, you have general liability, you have different professional liability, you have commercial auto, et cetera, et cetera. Right. Usually, if you're starting somewhere, you're going to start with a line. And while you could build an insurance company and a technology platform to complement it, that would support all lines and support all ways of billing the consumer and support different billing cycles and et cetera. If you don't even know you're going to have success or have market fit with the first line, you focus on building the first line. Now, as you're building that, though, you don't potentially don't build to the exclusion of adding more lines or adding new billing methods or et cetera. But you don't go out of your way, in my opinion, to go build those at first until you have the signal. And I think Amazon does this really well. Like, you never build to the exclusion of uh, building for success, meaning, okay, if this is successful, how do I make sure that it'll scale appropriately? But I'm not going to go build for n number of variants and n number of cases to start if I don't know even if the idea is successful. Let me go quickly iterate. Let me go quickly experiment. Let me go get the signal. Once I start getting the signal, then because I was intentional up front about what I was building and why I was building it, I should also know where is the first areas I'm going to have to invest if I am super successful. I want to expand to another line. If I'm going to have to expand to other marketplaces, if dot, 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 dot. And so again, to me, it's intentionality to make sure that when you are making those bets, you're not doing anything unintelligently to the exclusion of something else. By the same token, you're being very intentional if the investment to make it scalable is material incremental, making sure you're not walking through too many one-way doors before you get proof of life.
That makes sense.
Did I answer your question?
Yeah, definitely. And another question I have is, if I'm sitting here and I'm trying to assess or, really understand, the CEO and the mindset of a startup CEO, whether, I'm looking to join that CEO's team, whether I'm trying to do diligence to acquire that company, or maybe I'm just looking to, figure out whether or not I can really count on the CEO's leadership before I enter into a commercial agreement. Regardless of the case, what are, in your mind, what are kind of the key tells of a CEO who has, really sound judgment and is capable of, high velocity decision making? Meaning, what are your criteria for identifying leaders who are ones that you can count on and that you're making a really good kind of long-term decision in supporting, whether that be joining their company, acquiring their company, or really signing up to a big deal with that company?
Oh, that's a great question. Let me think through this a second, because I have strong opinions on it. Some of those strong opinions are informed by, we'll say, personal experience that may not want to go fully in detail on. Uh,
Yeah,
the
you can keep it positive. Keep it positive.
I'll say this. I'll say this. I think a key tell is ultimately what separates, in my opinion, a either mission driven CEO or even a success driven CEO that is successful and that is the make the right bet, whether it's a bet from an outside perspective or even from, is that a place I'd want to go hitch my wagon to and go work at. Is is the vision clear? Is the vision concise? Is the vision focused? That's the first. And when I've seen that be true, I think the companies that I've both seen from afar and have worked at are wildly successful. I would say the second component is not just that. It's also the realism and the pragmatism that leader brings to a conversation, right? Like, while optimism is important, right? And I never worked at Apple, I never met Steve Jobs, right? But from afar, right, he was at times, even people talked about with the distortion field around him in terms of, so maybe the optimism of being able to deliver on ideas. I think even in with those type of leaders that are maybe optimistic about where they're going or the new ground they're going to cut, there's still a healthy pragmatism or realism, or even, I don't want to say paranoia, but an obsession, if you will, around not just is everything going to work as it, what could be the success criteria, but how am I going to avoid failure, and being pragmatic about that. And I never was in a meeting with Jeff Bezos. I crossed paths with him one time in my 7 years at Amazon, but even other leaders at Amazon that I know came from that same sort of school of thought that I had plenty of meetings with. There was a healthy optimism about what we were going to do, how we were going to do it, why I was going to change the world and be successful, with a lot of pragmatism on how do you know you're actually making progress? How do you know, right? Oh, this isn't working. Let's talk about how we're going to fix it. And I think, to me, the CEOs, both startup and bigger company, and executive leaders, will say that are successful, and that even when they hit adversity, they have that gene, right? The ones that are just like wild-eye optimists that can't be focused, that sort of skip around everywhere, and ultimately aren't pragmatic about, like, what are you going to do when things aren't well. Tell me, it's a visionary leadership that, while maybe occasionally successful, I've never personally experienced to be successful. And I say successful meaning long-term successful. So to me, like, those are two key things I look for: that sort of that crisp vision, be able to clearly articulate it in a way that is inspiring, in a way that makes sense, but then a pragmatism to go along with it of what are going to be the challenges, how are you going to overcome them? Even if they're overall optimistic about, we are going to overcome it, here's how we're going to do it, right? Understanding that it ain't going to be a clear shot to the goal line. I'm going to have to break some tackles along the way. Maybe being confident, I'll break the tackles, but understanding the tacklers are coming and how you're going to break them. Those are, to me, the leaders that I think are the ones that will ultimately be super successful and have been historically.
No, it makes a ton of sense. If I may, the last question that I have for you is, really around, given your experiences at Amazon, given your experiences working at startups, kind of high velocity companies that are moving very quickly, uh, would you ever be in a position to come back to a larger technology company if you had the opportunity to truly be, and I'll kind of air quote this, an entrepreneur, an entrepreneur who has the flexibility and degrees of freedom and the autonomy to make good, sound, long-term product decisions on behalf of customers, but within a larger organization.
Yeah, absolutely. I'm still approached about opportunities. I'm obviously I own Leverage Loop, and that's my sort of my entrepreneurial pursuit right
Mm-hmm.
now. Um, but not only would I try to potentially do my own product idea if I had one that was really interesting, if I had an opportunity to go work for a company, big or small, um, that I felt like I could make an impact at, and I that allowed that level of freedom. Honestly, in some respects, a bigger company may, if you had that sort of that perfect criteria, like I loved my time at Amazon for that exact reason. If you have that perfect criteria where you have a large enterprise with the stability of a large enterprise and maybe with the resource of a large enterprise, even if that enterprise is making a pivot and they're making a pivot in a direction, but they're committed to that direction and they really want to go in that direction, I'll join a legacy company that is truly committed. The real sort of secret, the magic there is, are they really committed to that pivot, or is the bigger company that's willing to make that innovation bet, are they really committed to the entrepreneurial mindset? If I find one though, absolutely, I would do it in a heartbeat, because again, I think in some ways it's no different than, Amazon was. I think people say, and I even said it when I worked there, of like tens of thousands of startups, thousands of startups under one roof, because of the way they operated. Now I can't. I've been gone now 4 years almost. Can't say it's still that way. But at least when I was there, and when we worked together, it very much was like that. And that allowed a lot of entrepreneurial creativity, not perfect entrepreneurial creativity, mind you, but a lot of autonomy, a lot of ownership, a lot of the ability to go and drive and own, that I am interested in. And I think it's important that most, I think, really strong technologists, product leaders, innovators want to do something similar. But for me personally, that guy would have no objection to going to a bigger company either, if they had all
Yeah.
those things.
Yeah, right. Totally, totally.
Yeah.
I hear you.
Well,
All right.
Andrew, I just want to thank you for taking the time to do this today. And for those out there, we'll be doing more discussions over the next probably month or so. I think the next couple topics will be around product and engineering. So stay tuned and look for those. Thanks so much.